Right, got the live on TikTok right now. Also got the live on YouTube, and got my nice morning coffee. All right, we're gonna wait a few more moments here so everyone is able to join in on the Discord. I said we're gonna start in 2 minutes. So I'm just waiting for a few moments so people can hop in on the live, ask questions, get engaged in the content that we're providing. Pretty interesting day for the charts. Got a huge sell-off in the stock market in the morning, but it is recovering quite well and actually held that support. So we're getting a little bit of a squeeze, so we're just consolidating. But the FX markets, man, Euro is on an absolute move. Euro New Zealand yesterday, fucking phenomenal. But we'll see where it goes from here. Euro New Zealand is definitely on my radar. Euro US dollar as well. How's it going, Truck Nubs? Hopefully you're having a great day. Going to be starting very shortly here. So we got a decent amount of people on TikTok and YouTube. So let's get the recorder and let's get this global macro update going. Starting off like always with our equities. All right, so right before we start, if anyone has any questions while we're going through the charts and the content, don't hesitate to write a comment if you are curious about something that we're looking at or would like a question answered with our method or our structure of how we approach the markets. So let's get this started. Let's get the recorder, gonna get a little drink of coffee, and then we'll get right into it. All right. So let's get the secondary monitor. Hey everyone, welcome to another global macro update. We're going to be going over a bunch of different charts, starting with the equities, and then we're going to dive into some bonds, oil, metal, and all that good stuff. So we always like to start off with the equities markets, especially the S&P 500. So let's take it back to the daily chart and have a good understanding of where we currently are. So we already talked about this major rejection candle that we have in the previous daily candle. So let's get our picture right here and discuss what we can currently see. So we know that there's a key level of resistance right here. We see lots of rejections, especially with this candle indicating sell pressure coming into the market, right? But we also know within this zone right here, previous level of resistance, we see lots of wicks getting rejected many times, and then we get a push to the downside. So we know that this is a key zone of sensitivity for the chart. So what we're seeing right now is heavy sell pressure keeping the price below a certain zone and heavy buy pressure keeping the price above a certain zone. So what I actually currently see right now is potentially going to be a descending triangle pattern where we see strong levels of support right here and strong levels of resistance. So we definitely are getting a squeezing and a contraction in the volatility and in the price action, which is not really a bad thing. We might have a little bit of a tough time trading within this range if it just keeps on consolidating within this zone right here. But as long as we do see a breakout and a clean breakout, and then we could see a pretty strong move to the upside. So let's just go over both situations. Let's say we're going to get a move to the downside. We already did get this huge rejection. And let's say we hold below this major horizontal zone and confluence to the descending zone. Well, the high probability situation, if it breaks that, would be obviously we would have a zone break this horizontal zone as well as this ascending zone of support. So we know that this is a key level of demand, and if it breaks, we're going to get a pretty significant shift to the downside, in my personal opinion, back towards our major level of support at around 31.75, 31 or 29.79. Very, very off. But that's the major level of support that we would be looking for if the price excuse me, does fail to make a move to the upside. So if it moves to the downside, some level of consolidation, and once this breaks this ascending zone and horizontal zone, then you'd be looking for a move from around here back to the main level of support, because we did have that before, where we had this zone break, and then we had another zone break, and then that last structure got to move from all the way up here. Let's just get our brush. We got to move from around here. We broke a nice ascending zone, and it fell all the way to our key level of support. So I think that if we do see an actual break in our main level of demand right here, the next main zone that the price is going to be hitting is 29.75, somewhere around there. And that's going to be the main structural zone for the next level of demand. We see it was a key level of both resistance and support, and we see lots of rejections back in June and, well, late June of this year. So if we do get a move to the downside, that would indicate that it's very risk off. And then the next structure that we would look for is an anchor point. 1, 2, draw that zone all the way down in this nice horizontal zone. So that would be creating a potential descending triangle, which isn't fantastic for the bulls. If we get some weakening and then we get an initiation of a potential dump, that could be the direction that we could be going if it starts to weaken, because we see a huge impulsive move down, a rally, but the rally is weakening. This is a high, this is a lower high. If we dump down and form a lower high and a lower high, that's going to be a potential rounding top, which is not looking great for the bulls, but would provide some opportunistic risk-off situations if you are nimble, flexible, and are willing to adapt to different changing market conditions. So on the daily, I'd say it's just consolidating between this key resistance and support, and we might see a little bit more consolidation here in the next couple days, which isn't so bad because we got a pretty big move recently. But we will look at the other markets a little bit later in the video. So right now we're just consolidating. We already said that there's a major level of resistance and support, and unless it breaks to one side or another, it's probably going to be contracting in volatility, going deeper towards the apex of this structure. So that's going to be my view of the SPX 500. Let's quickly now go into the NASDAQ. I'm going to get a little bit of coffee and then we'll jump right into it. And quickly looking at the comments right here, Jamie says, bless you, thank you very much. What stock are we looking at right now? So what we're doing right now is looking at the major US indexes. We just looked at the SPX 500, which is the S&P largest 500 companies, and we're now looking at the NDX or the NASDAQ 100, which is a different index which has been outperforming the NASDAQ, or outperforming the S&P, sorry. This is the NASDAQ and it's outperforming the S&P, just in terms of relative strength. So we can see that it had a blow off top, huge move to the downside, massive bearish push, but it does look like it's able to hold here. If we just readjust this a little bit, because trend lines are somewhat of an art, you're not going to get it. It's not like horizontal zones. You can actually create a potential level of support right here. So let's get our projection, get the resistance right there, and get our nice level of red. And now we can see this previous level of resistance is turning into a new level of support in confluence with our nice support zone right there. So the NASDAQ does not look bearish just yet. We did get an extremely aggressive move to the downside, but I definitely, as long as the S&P is consolidating, I think this could start to slowly rally back up. And let's just draw in something that could look like that. So I'm thinking something like this, or maybe a little bit slow of a crawl up, but the fact that we have not only an ascending zone, which was a previous resistance acting as a new level of support in confluence with the previous horizontal zone, definitely suggests that the market structure has not broken, which means that the overall price action is still on an uptrend, holding previous resistances as new levels of support, making higher highs and higher lows. So overall, the NDX is still looking bullish, which plays into our overall global macro sentiment as a risk-on opportunity for global investors. All right. Epic Player says, at what level would you recommend shorting the S&P 500? So let's quickly talk about the short side, or a area in which we would classify this as a potential extreme risk off trade. And to be completely honest with you, it's pretty far away because the S&P has been extremely resilient. I would say an area where I would want to see the price pass before I look for short exposure specifically on the S&P would be that 2985-ish area of support. We see that key level was a previous resistance, and it was also the 61.8 fib level on the way down. So we got that huge move to the downside. Let's quickly just take a picture right here. So we got that massive impulsive push to the downside. When we were rallying back up, this zone right here was the 61.8 fib level when you connect the high and the low. So this was a major level of resistance, and to be completely honest with you, I was shorting when the price was at these zones, and when it broke, I lost that money basically. I did not make any profit on that trade. But what I'm looking for is if we are going to get another short opportunity, I would expect and hope this to be a potential rounding top. So we get a strong move to the upside, we get a rounding top, and what we would need to see is this current high hold, and we start making a series of lower highs. And then we get a nice rounding top, right? This is kind of what BTC is doing right now, and this is why it's a little bit worrying for me for any potential longs, because we got that nice rounding top. Like we saw rounding bottoms in BTC back in 2018 to 2019, as well as the gold bottoming out in let's say 2014, 2013, all the way until like 2018, 2017, when it broke out of that $1,400 key level of resistance. So that's going to be my answer. I would say, for me personally, I would want to see the price break this under 3K zone, 2950 zone, in order for me to look for short exposure and continuation patterns below that zone. And that is what I would be looking for. So hopefully that answers your question. Let's look at that. I did short too. I lost as well. Yeah, so a little bit surprising, but what I learned from the short trade that I took on S&P that did not profit and hit my stop loss was, in my opinion, I don't know if this is going to be true for every single time, but the stock market reacts more for liquidity, so money printing and interest rates, more than the actual economic data that is coming out. So let's say there is a contraction in GDP, and PPI numbers and PMI numbers are not looking positive. They're below 50, they're below forecast, and it's not looking great for the economic data. While if the central bank, the Fed, whatever central bank you're looking at, is printing shit tons of money, aka creating stimulus, injecting newly, freshly created capital into the financial markets, as well as lowering interest rates to make it extremely easy for businesses to borrow money, and it basically costs nothing to borrow money, that's going to be creating a lot of potential bullishness, even though the economic data is not positive. So then what I would be looking for in order for this to turn to the downside is I would want to see overall hawkishness within the monetary policy makers. And what does this mean? Well, we could see a reinflation. If everyone is dovish, thinking that everyone needs, or not everyone, but the country needs stimulus. That there's no worry of inflation. There is massive worries of deflation and deflationary pressure keeping a hold on asset prices, right? They're going to create more stimulus, print more money, lower interest rates, right? And that's going to reinflate financial assets like the S&P 500. So if they're going to continue this path of ZIRP, zero interest rate policy, or close to ZIRP, as well as keep on printing money, I think that this will reinflate and start moving to the upside, which may be crazy, but if you have the power to print money and buy something, you always have a buyer. But if the central banks are going to be worried about inflation, they're going to be turning a little bit more hawkish, they might not print as much money, they might not create new currency and add it into the circulation or the monetary supply. And what they might actually do, which would greatly impact the stock market in a negative way, would be to actually raise interest rates, because it would cost more to borrow money, and it would be more expensive to borrow money for businesses. So that would inhibit businesses from borrowing money, injecting investments into their businesses, which would make it easier to grow for them. So the fact that you're raising rates, it would be harder for businesses to borrow money, and then they won't be able to grow as quickly. And some of the zombie companies that are barely able to scrape by may not be able to scrape by, and bankruptcies can come in, and it's a chain reaction. So I think the key thing to look for in a potential extreme risk-off environment or situation or outcome would be to see policymakers start worry about inflation a little bit and start to raise the interest rates and reduce the stimulus within an economy. Once that comes into play, I think then we will start to see major moves to the downside. Personal opinion. And I think that the only situation where policymakers would turn hawkish, would turn to reducing the stimulus and increasing interest rates, is when the CPI numbers, when inflation rates or percentages go up, right? We're looking at consumer price indexes, CPI numbers, and we want those to go up in order for the Fed to basically have no choice other than to raise rates, or else they're going to basically turn their currency into worthless pieces of paper because of the inflation, right? And how do central banks make sure that inflation is in check? They raise interest rates, right? They become more hawkish. So I feel like the marker is, I'm assuming you're saying market is irrational at the moment. I would say not really. It's pretty tame, pretty big resistances, but I would say there's a huge discrepancy between the actual economy and what's happening for everyday citizens versus the financial markets. Because the Nasdaq is hitting all-time highs, absolutely exploding. Whereas obviously we do see in the economic data, there is millions and millions of people, not only that have lost their jobs, but are still losing their jobs. Like the new unemployment claims are still in the millions. So there's brand new people who are just unemployed every week coming in millions, and they're continuing to stay on unemployment because we see that in the continued claims. So there's still people who are worried. There's still people who are losing their jobs, who are really suffering. And I completely agree that the current market condition does not account for the masses of the people who are actually getting hit hard by this event. All right, so had to get a little bit of coffee there. Now we're going to go into quickly the Russell 2000 here. Not much has happened. And then the VIX did pop up above our previous resistance right here. And it is holding potentially as a new level of support. So what we are looking for on the VIX or the volatility index is when we see volatility decrease, this is a currently risk on sentiment environment. So when we see, ideally, we were looking for something like this, where we're seeing a slow fade of the VIX. That would be a risk on sentiment, where volatility is reducing, the S&P is slowly chugging along really nicely. That's great to see. But when you see volatility increase, that's going to create some worry, fear, uncertainty in the financial markets, and that is going to create a risk-off environment. So if this is absolutely spiking, if the VIX is spiking, things are selling off. Things that you're probably investing in are selling off, right? Because usually investments are risk-on investments. Unless you're a little bit more savvy and a little bit more active, you're probably long-term investing in an ETF or some index, right? And if this is going up, those indexes are probably not doing very well. So we see it go back into the range, which is an indication that we could see further volatility come into the market. But like always, we'll see how it goes. We're not trading the VIX or anything, but this is a good indicator, in my opinion, to see if the overall S&P is kind of more in fear or really happy, moving on along nicely, slowly making higher highs and higher lows. So right now, we're in a consolidation, just made a significant move to the downside, which makes sense that the volatility is spiking. But if we do get a consolidation and a break above the 30, let's say $200 zone on the S&P, and we start moving up higher, making a new high from the July 13th high, that would probably indicate that the volatility is going to drop again, and then we could just see something kind of like this. We just see a drop in volatility, kind of like that. So that would be, if this comes into fruition and the S&P starts to slowly move up, that would be definitely a risk on move. I think crypto will be doing well, alts will be doing very well, and if you are in equities, NASDAQ will be doing extremely well because that has been relatively strong compared to almost every other index globally. All right, now we're going to quickly look at the TikTok questions, and then we're going to get into the global equity markets. Going to be looking at stuff like the Japanese Nikkei 225, ASX for Australia, FTSE 100 for UK, and the DAX for Germany. So we got a little bit of Europe, a little bit of Asia, a little bit of Australia, and it's good overall global index analysis in my view. All right. Hi, I know not many people are watching, but still go ahead. You will make it. Keep going. Well, thank you very much. We got 12 people watching and 3 people on YouTube. So not a tremendous amount of people. That's totally all right. We haven't been doing lives for too long, so, everything that's worth doing takes time. And this is really helpful for me as well because as a trader, I go through this every single day anyways. So this is my way of making sure I'm staying on top of the markets because I would do this anyways. I do this every single day, even with or without making a video. So why not make a video and try to share some ideas and give back to the community that has helped, me learn my method, my strategy, and my rules for trading in the financial markets. So, thoughts on Dogecoin? I think it's a big pump and dump. There is no actual project behind it. It's not going to be something I'd touch with a 10-foot pole, even if it has the best structure and a great potential opportunity. Technically speaking, the fundamentals are total shit. It's a meme, it's a joke. It's not an actual coin. So instead of putting capital into something that's a joke, I would recommend it if you are looking into the altcoin market, things that have relatively strong buyers or relatively strong price action compared to the sheep or the rest of the herd for the alts. And what are those alts that are doing really well and are outliers for the upside? Well, I would definitely say Link and BNB are my personal favorites, and we're currently looking at Cardano, VeChain, Atom, or Cosmos. Those are the types of relatively strong alts that we're looking at right now as opportunities. And as well as Ethereum and Bitcoin, you cannot go wrong with those two. But I would stay away from Dogecoin, but that is just me. John says, what do you mean by risk on and risk off? Well, in short, risk on is basically what we're looking to see in this analysis is to understand global investor sentiment. So global investor emotion, I guess you could say it in more simple layman terms. And how do we understand this, right? Basically, there's 2 factors. It's either global investors are worried, fearful, anxious, nervous, and they don't want to risk a lot of money, or they're optimistic, hopeful, a little bit greedy, willing to risk a little bit more to gain more, and things are looking optimistic, hopeful, good times, and there's less fear in the market. A and B, that is how we're viewing the market. And that's why we're doing our global macro update, to understand the global risk sentiment. Is it a high risk situation? Is it a low risk situation? And capital, as a pool of capital, will flow differently to different assets depending on that emotion. So for example, during the COVID crisis in early March, there was immense amount of fear, uncertainty, worry in the markets. I'm sure everyone could agree with that, right? What happened? Well, money was fled out of risk on currencies, right? Or risk on investments, indexes, stocks, whatever the case may be, and went into and funneled into risk off assets, right? Bonds, they went up, right? The yields absolutely plummeted, right? Things like currencies, like the US dollar, the Japanese yen, those things did really, really well compared to things like equities during that time, or even gold, silver, crypto, anything. So why we do this is to try to understand global risk sentiment. Hopefully that answers your question. All right, Epic Player says investors tend to change asset classes depending on the perceived risk in the markets. Epic Player, you are exactly correct. How long have you been trading? I've been trading for over 3 years now. Started in the equity markets, mainly in like ETFs, and I did some biotech because I'm working for a biotech company. Basically, looking at phase 2 and phase 3 clinical trials where they're actually testing the efficacy of the drug, and that would create a catalyst in which you have high R vol and high flying price action and movement, and that is the environment in which I would day trade. And then I switched to longer term swing trading because I found a different job that would inhibit me from actually being or able to trade at 6:30 in the morning. So then I switched to crypto and forex for longer term swing trades, and then I've been kind of there since. I trade metals, basically crypto and forex, primarily within my trading strategy. I will dabble in the S&P futures or CFDs, contracts for differences, but my main thing is cryptocurrencies and metals for sure, and I like to stick to those. All right, so how many accounts have you burned? Actually, none. To be completely honest with you, when I first started, I wouldn't risk much. Like my first year, I didn't make money. Some people say they make like 100K to 20K or whatever first year. I did not risk too much in my first year. So, I think I had a 5K account when I first started. It went to 3K. So I didn't absolutely burn it. It didn't go to zero, but I lost, as a person who was starting, I thought a substantial amount of money, and then I started understanding that I should backtest the system and literally only use that system. So let's say you're trading in the markets and you've never backtested a Head and Shoulders. You have no idea what your stats are. What should you be doing? Are you approaching a Head and Shoulders the exact same way with the most limited amount of variables as possible every single time? Well, if you're not doing that, if you're sometimes creating a neckline as an ascending zone, and if you're sometimes not, have you backtested the difference? If you don't know the stats, if you don't know the strike rate, if you don't know the average risk reward, if you don't know the system in which you are implementing your strategy for that price action pattern every single time, you can't trade it. That's through the year that I found is I needed to have a sample size of, let's say, 50 to 100 trades of a extremely specific setup that I would trade in a dependable, systematic, repeatable way. That is something I can trade because I've backtested it. I know exactly, okay, what's my average strike rate? Okay, let's say it's 57% to 63%, somewhere around there. If I trade 50 times, my win-loss is going to be like 2.3, 2.4. Okay, well, I have confidence. If I do this exact set up every single time for 50 times, I can't say guaranteed to make money, but if I follow my rules, if I stay systematic, I have a very high probability of making money on a monthly basis if I stick to this very, very specific structured trade plan. And I didn't do that before, right? In my first year, I was reading about things about wedges, triangles, Head and Shoulders, channels, and say, oh, okay, well, this price action pattern must work because I saw it and I read it somewhere. I saw another trader use it and it has to work. Well, that's definitely not the case, right? You can't have an array of price action setups that you think that you know how to trade without actually testing it and proving to yourself that you can trade it. Like what I found is I have a higher win-loss or strike rate on descending wedges on an uptrend than ascending wedges that melt up. So I have grown to only really look at descending wedges on an uptrend because I have a much higher strike rate and dependability trading that price action pattern. So my tip, I guess, would be to backtest something before actually trying it and only put your capital in trades that you have backtested over, let's say, 100 times, and you do that sample size a couple hundred times, and the around average ballpark strike rate, which is a win-loss, as well as the risk-reward, not your perceived risk-reward of what you want, but the actual take-home risk-reward. And once you know those numbers, you can have a lot more confidence going into the markets, right? If you lose a trade, you're like, okay, that's totally fine. I know for a fact I'm going to lose 40% of my trades, right? And if you accept that before you even start your sample size, If you lose 3 trades in a row, which definitely happens in the markets, it won't really affect you because you're like, you know what, that's totally fine. It could have just been those 3 trades that came early. And so then later in the week, later in the month, I might get those, 3 risk rewards, 4 risk rewards, right? Because they will come, right? We're playing a game of probabilities. We have no idea if this current trade that we're going to take is going to be a winner or a loser. We have zero assurance of that. But what we have assurance on is our system, our strategy, and our discipline, and the way that we trade is able to provide us profits over a series of trades and a sample size of, let's say, 30 to 40. That is our edge, right? So that is hopefully giving you a little bit of information on the difficulties of trading. All right, I'm going to quickly look at some global equities, and then we're going to dive back into the TikTok here, just trying to get a little bit further along. So, Nikkei 225, already said all these, but basically we're looking at the global markets. I'm not going to trade them, but we're just understanding what is happening. Well, in short, we're consolidating. Germany's DAX is actually doing pretty well, formed a series of higher lows within the consolidation, and we're trying to really hit the early June high. So the DAX is performing very well compared to a lot of these other indexes. FTSE's pretty weak, but it is still holding that little support there. It's not going to be absolutely perfect. We can make it a little bit bigger, like so. But we're just holding our previous resistance as a new level of support, squeezing as a descending triangle because this is a series of lower highs and a horizontal level of support. So it's not looking phenomenal for the FTSE, but overall global equity indexes are still consolidating, still trying to make a continuation pattern to the upside. And in my opinion, this is potentially still a reaccumulation phase where we're kind of finding an equilibrium between the buyers and sellers. And we do see some indexes that are trying to break out and form a higher high from that June high that we had. So Japanese stock market and the German stock market are probably going to be the 2 indexes that are going to test the high first. Getting a little bit of coffee, and then we will jump into the TikTok questions, and then we're going to look at the DXY, which is the US dollar currency index, which is basically just the strength of the dollar. All right, so Jim Bros says, how much do you make a month trading? Can you go full time? I'm already trading full time. So I do this full time. I trade in a prop firm in FX, and I trade crypto, and I trade metals. So yes, I do this full time. I'm not going to say exactly on average I guess, monthly profit I make, because we do try to keep that somewhat. Because like, you could be trading $100,000, $1 million, or $10,000 or $1,000, right? Your system and your setup and how you approach the markets should be exactly the same. And it should be. If you're trading in liquid markets, that should be, I could be trading $1,000 or $1 million, right? The approach should be exactly the same, especially if you're trading extremely liquid markets like FX, right? You have a entry, stop loss, and take profit, and your approach should be exactly the same. So what we teach is don't look at the money that's coming in, look at the percentages, look at the risk reward, look at the win-loss, look at the stats that you can accumulate over a series of trades. And that is what you should be looking at, right? The stats is the number one thing as a trader. It's not about feeling, it's not about many things that people perceive it to be. Yes, psychology is the number one thing that you need to worry about in terms of keeping level-headed, staying disciplined and all that. But in terms of your strategy, that has to be extremely dependable, repeatable, and that's the number one thing to work on, in my opinion. But yeah, I do pay for my living expenses, and I do work from home, and I like to be definitely. I can't say I like to be someone who. Basically, I like to be a money manager one day. If you're looking at some of the most successful people in the world, I have pretty high aspirations, but still just trading, I guess you could say somewhat retail, somewhat institutional, if you are perceiving a prop firm to be an institutional, which I would as well. But hopefully that answers a little bit of your question. Epic player, it depends on how much trades he takes and how much risk reward he wants. Yeah, completely agree. In terms of risk, I don't really risk more than like 1.5%. 2% is really, really the maximum. It also depends on if I'm trading for the prop firm or if I'm trading with my own capital. Because at a prop firm, there's very, very strict regimented risk parameters that you have to stick between. Which is good because it makes you super disciplined, and there's like a risk manager that talks to you if you're under, over risking, all that stuff. But as an individual, as a retail trader, obviously no one's going to be doing that for you, so you really have to make sure that you're staying disciplined. But I would say anything under 2 is fine. Anything over, over 2 is a little bit aggressive. Anything over 3, I think, is a little bit too much risk per trade because you will have drawdowns. Let's say your win-loss is like 50% or 60%. So let's look at some stuff here just quickly, and we can see the win rate. So let's say on average you're winning 60% of the time, which is a decent win rate. I wouldn't expect anything at like 90%. I'm very comfortable at like 65 to 55. That's a great win-loss in my opinion, because if you have a risk reward of 2 to 1, you're making good money. We can see that there is a 22% chance. There's a 50% chance of making 4 losses in a row if your win-loss isn't kind of anywhere around here. And you're at like 58, 38, 22 or whatever, 5 times in a row. So if you're risking, 3% per trade, that's 15%. Boom, gone, right? That's a lot of your capital, right? And the thing with percentages, let's say you lose 50% of your account, it takes 100% to get to break even, right? It's more difficult to grow an account than to blow it. Why do you think so many people blow an account? And why do you think it's so hard to grow a small account? It's because if you have $1,000 and you're risking like $10 per trade, that may not seem like a lot. And then you might be like, oh, I want to risk $100 a trade on my $1,000 account. Well, that's 10%, right? So then if you lose 4 times in a row, 5 times in a row, that's 50% of your account. It takes 100% to get to your original amount. So understanding that risk and the percentages play a crucial role. So you want to risk not a lot of money in terms of percentages of your total portfolio per trade, right? And you can see it is a very probabilistic situation to lose 4 times in a row, even 5 times in a row, if you're, winning 55% of the time. If you're maybe winning 70% of the time, you might have a lower risk reward. So you might be risking $100, and your average take home if you win is like $150 because you're winning a lot more. Whereas if you have a higher risk reward of like maybe 2.5, you might be at a lower win loss, right? That makes sense. It's kind of like 2 levers. You can't have a risk reward that's like 9 and also win 90% of the time. I guess you could, but that's extremely difficult. I would say, 2.5, 3, 2.2, sitting around like 55, 60 is a solid overall number of data and the stats that you would be looking at to be a pretty consistently profitable trader in my point of view. You don't need to win every single time. You really don't. You just need to manage your risk and let your winners run, and those winners will pay for your small losses because you probably have a risk reward of like 2, 2.5, maybe 3 if you're really having a good month. And if you're winning 55, 60% of the time and you're making 3 times more than you lose, you're doing really well. So let's now go into the DXY, which is the US dollar currency index. So we see some topping, right? So we see a nice rounding top with a key level at around 96, and it does look like it's holding it. We did have a nice support held there multiple times, failed to make a lower low, and now we're making our lower low, pushing below our most recent support zones that were held. So we did get a candle closure below that zone, so now I definitely think that we're going to move to the downside, holding our descending channel, continuing the momentum to the downside. And when the US dollar currency index is going down, it's perceived as a risk on sentiment. If capital is flowing out of cash, which basically has a 0 ROI, and going into things like equities, and it's holding supports, and the NASDAQ is booming and holding supports, that's a risk on sentiment, right? You're looking in the FX, you're looking for odd New Zealand. CAD's been doing pretty shitty, but odd New Zealand's been doing pretty well. GBP's been doing really well, and you're looking to short things like the US dollar, Japanese yen, CHF, stuff like that. Euro's been doing really well as well, so it's not like black and white, but definitely in my view of the global markets, it's still in a risk on sentiment move and overall environment in my view. So it makes sense that the US dollar is going to be moving to the downside. And we do see stuff like the Australian dollar, which is a risk on currency that's been doing really well recently, start to move back up when we go to the 1 hour. Oh, that's going to be the US dollar index. Don't want that. When we go to things like the 4 hour, we do see a potential continuation pattern, possibly a high base right around here. And then we see that nice structure forming with the previous level of resistance turning into new level of support, holding the series of nice higher lows. So it does look like we are continuing its trend to the upside. We do see that there is a resistance at around 0.7. So if it does break above that zone, I think we could continue the move to the upside, which would create an overall risk on sentiment for the global markets. So I would be cautious to say that we're in a bear run just yet. It's definitely not looking like that yet. So we're in a consolidation, which we did have a move to the downside, but I think the buyers, the bulls, the people who are hopeful, optimistic, are still in control and have high conviction in the markets. Bonds, not much to talk about. Very, very little movement. It's a little bit move to the downside since the S&P did sell off a little bit yesterday, but overall, not a lot happening within the bonds. All right, so quickly looking at the questions here. Epic Player says, please view VeChain. So yeah, sure, that's not a problem. So let's quickly talk about the metals and the gold and silver ratio. So we've been saying how bullish we are in silver, right? We made YouTube videos before. We talked about it on our Discord, especially the Performante Premium members. But we were saying that ever since the gold and silver ratio started breaking its second ascending wedge, this is the first ascending wedge, we made phenomenal trades on silver from like $14 to $17 and really, really great moves on silver, right? And what did we see when we broke this zone, right? We saw a shifting of a trend in the gold and silver ratio where silver is going to outperform gold in the near future. It doesn't mean gold is going to be bearish. Gold could be consolidating sideways or slowly moving up. It doesn't really matter. As long as it's holding its ground, it's going to give permission for silver to rally. And that's exactly what we're seeing right now. We already talked about the gold and silver ratio shifting, and we said that gold's looking good, but if you had to pick, if you're an active trader, silver is the spot to park your capital, for sure. And why is that? It's because of the gold and silver ratio moving to the downside, breaking the previous low, making a new low, breaking supports, holding resistances, forming a nice structured descending zone. And we can see that very clearly on the silver chart right there. So we were in at, $18 and let's say just under 10 cents. And now we're at $19.18. And then we got to take target, partial take profit, depending on how aggressive it moves, to that zone of around $19.60. So risk reward is great on this overall trade. It's looking great. It's moving aggressively to the upside, moving in a parabolic state, which is great to see for our move. And this is that previous move, right? We had that descending wedge, previous resistance, new level of support, consolidation. Once it broke out of that consolidation with a huge bullish engulfing candle, engulfing many candles prior, that's going to be your initiation that, man, that's a huge green flag that you should be in it. Same thing here, right? Push, exhaustion, completion of the exhaustion, we want to enter, and then you got that next impulse push, breaking resistances, holding supports, looking phenomenal for this metal. So I'm not going to be doing anything other than holding silver because it's looking great. There's nothing for me to do. I've already entered, and unless you are way late to the game, it kind of doesn't make sense to enter at this point unless you're really expecting the continuation to continue. But in my opinion, the entry was in this zone, and we're looking like we could be hitting our target fairly soon, which is awesome. So a lot of patience on this, a lot of waiting around for first little bit because there was quite a bit of a drawdown. It went in our red, so we were eating a little bit of red for a little bit there, but patience is for sure the name of the game, and also having confidence in your structure and your setup. It could have been a loss. We had no idea, right? The structure looked great, the FA looked great, but you never fully have any sort of assurance or guarantee. That's the financial markets, right? You got to be playing the game of probabilities, and you got to have confidence in your own system and structure and your own ability to create profit through a sample size of 30 to 50. Not any single trade. You can't have any guarantees on a single trade. You can only have assurance on a sample size of 30 to 50 trades, because then you can create an edge. So overall, silver looks phenomenal. Not a whole lot to add on to the commentary because it's looking great. And something to note on gold, and this is why I think I might just scrap the previous target if gold starts to really look solid. So gonna get a little bit of coffee, and then we'll jump into the silver. Silver has quite a bit to talk about that we're gonna be looking at today. So I'm gonna get a little bit of coffee, and then we're gonna jump right into this gold chart, which will play into a potential continuation pattern for silver if this particular trade does end up moving to the upside. All right, quick question from Epic. He says, link for the Discord. So you can find the link for the Discord by going on our Instagram, by going on our website, by going on our TikTok. I guess that only links you to YouTube as well as Instagram. But if you find the little Instagram picture button on our TikTok, you can go into our Instagram, and in the Instagram bio, you will have a link tree, and that will take you to our Discord. You can also go to performante.ca, where you can find our Discord link there as well. So let's talk about gold. So we had this nice ascending wedge structure that we were expecting to melt to the upside, which we did right there. A little bit of consolidation, a little bit of worry, but we ended up breaking, retesting, and now we are, let's just get our arrow here. We are making a strong move to the upside. This was our impulse push, breaking our key level, and this is our contraction. This is our breath that the market is taking, right? Because the market moves in waves, it moves in impulse and corrective waves. This was a major impulse push because it not only broke the horizontal zone, but the ascending zone, and now we are getting our corrective wave, which is contracting the volatility, which is exactly what we're wanting to see. But not only that, we also see that there's a tremendous amount of demand right around this previous level of resistance. So we see a tremendous amount of buy pressure around that 1795 zone, and we see a series of lower highs contracting the price closer to the apex of the structure. Overall, extremely bullish opportunity for gold. And if gold's moving up, I think silver is going to be moving up at a greater rate. So let's now move on to the 2 hour and a smaller time frame. We can see that wedge come in a lot more clear, where we see our first rejection, our anchor point, second rejection, third rejection. So we can see that there are 3 rejections of this descending triangle, or descending trend line, right there. And then we have that major level of support that we already talked about, where there's lots of ascending zones and horizontal zones, creating lots of buy pressure at this area. So we see a squeeze right now, right, where there are a series of lower highs and key level of demand, and it looks like we are popping out of the resistance, which is going to continue the momentum to the upside. So what are we looking for to continue the momentum? Well, for starters, we want to see the price action break this descending triangle, right? But not only that, we also want to see the structure break. So we see our first resistance, second resistance, and now our third resistance at this horizontal zone. So we want to see the structure break not only the price action pattern, but also the structure. So we want to see a higher high form with candle closures on the 1 hour closing above this zone, right? And then what are we looking for? We're looking for either a type A or type B candle closure on this previous resistance, which is going to be acting as a new level of support. So we want to see buy pressure within this previous resistance acting as a new level of support. Once that comes into fruition, that would be the red flag for me to be looking for opportunities to the upside. And what are we looking for? We're looking for something like this, right? Move to the upside, validation of previous resistance, new level of support, and then we get our move to the upside. And then if you're looking for minor targets just for first levels, we get the size of the wedge, put it at the breakout zone, and then we see right around there, 1838, 1839, somewhere around there would be the next main target. And if you're looking for massive, huge take profits, if you're really looking for this to really run, you could be looking at the large size of this melt up as well. But I like to kind of switch to swing trades, and I think this could be the upcoming move that gold would have, which would play into the overall silver bullishness that we already have. So if gold does end up coming into fruition where it breaks this 1810 zone and then retests it for a new level of support, that would be a great opportunity for gold, in my opinion. But what we would be looking for instead of entering gold, because of the relative strength of silver, is we'd be looking for further continuation patterns to add on to our silver trade, because it's already in our favor. It's already heavy in profit, guaranteed to make us money because our stop loss is raised. But if it's going to continue, why would we not want to not only have exposure in it to continue the profitability, but also add to it if the other metal, the more significant metal in the metals market, is turning even more bullish? If gold turns even more bullish, I think silver's going to moon. Not to like $100 instantly, but it will go really aggressively to the upside. And I want a part of that, right? I want significant exposure and a huge move to the upside, as silver is going to provide that for me. And that's the goal of the overall structure when we're looking at gold, silver, and the gold and silver ratio. All right, so that's going to be the metals overview. We're going to quickly look at the WTI Western Texas Intermediate crude oil. So quick discussion on Epic. Says, thank you for all your wisdom and time. We'll see you in the Discord. Yeah, no problem, Epic. Like I said, I do this for myself as well. Really appreciate that, and I'm happy that you're able to think of this as some sort of education, entertainment, information, something that's able to provide you value, because that is the goal of this channel. Felipe says, what do you think about the Ichimoku clouds? Is it a good indicator for TA? I find it so interesting. I did use Ichimoku cloud for a little bit. I never really back tested it. I don't really love indicators too much, but I would say it's better than a lot of the simple indicators like RSI and MACD, because it does provide a leading factor. Like the MACD is a lagging indicator, whereas Ichimoku cloud does have leading characteristics which provide a little bit, in my opinion, better use of the indicator. Like Fibs kind of have that as well, where if you have two valid zones where they're cemented on a key structural zone, you can use potentially extensions or retracement levels, and those are going to be levels where you're looking to see the price hit and react to. Whereas if you're looking at, for example, a MACD, when it crosses and it looks more bullish, you know, the move's already happened. The trend is already in place, so it's a little bit late. So it's nice to see the Ichimoku cloud have a leading indicator instead of a lagging, which is good. But I didn't really find it extremely useful. I just focus, not purely, but I focus a lot, very heavily on price action and market structure, right? Using multiple time frames. That is, for me, what I found to be the most effective. I do like to use KISS, keep it simple, stupid. You know, that is what I found to be very helpful. But that's basically all I have. I haven't gone so in depth to backtest it a shit ton of times. I don't use it in my overall trading, but I do know some people, especially when I was really heavily listening to Chat with Traders. There's some people trading in the futures market in FX that trade Ichimoku cloud. But something to note, I don't know if it's still true or not, but one thing I did read about it when I was reading the Ichimoku cloud indicator, I do remember this pretty vividly, is things that are paired with JPY do well for the Ichimoku cloud, because it was made in Japan. I believe Ichimoku is, I believe, Japanese. It kind of sounds Japanese. So it makes sense that Japanese traders use Ichimoku cloud. So then there's more validation of traders using that, because traders are looking at the Ichimoku cloud the same way. Just a tip, backtest it yourself. I don't know if it's actually 100% true or not, but that is what I heard from a trader who's been using it for years, is JPY pairs within the FX market do respect Ichimoku cloud indicators pretty well, is what I heard. But definitely do your own backtesting, do your own simulation trading to make sure that is actually true. So that's going to be my overview of that. We will get into the crypto in a little bit here. People are saying VET. I will get into it. The last thing we're going to look at is WTI crude oil really quickly, just 2 minutes talking about it. We do see that we are holding this nice support zone, but we are not able to break into a new high above $40.50. So let's go into the smaller time frames. Now we're squeezing here where we're using this key horizontal level, and then we can just draw in a nice ascending zone right there. So this could be a potentially ascending triangle pattern. If it breaks this series of higher lows and forms a lower low, that would indicate a potential sell-off. That would bring the price back to around $36, which is our main level of demand or support. So right now we're just consolidating sideways right now, and I think we could move to the downside here if the risk off sentiment increases. But if the S&P holds its support, moves to the upside, and becomes more bullish, I think that oil could start moving to the upside as well, because oil is a risk on currency, or not currency, risk on asset. Oil is definitely not a currency. It's a very volatile currency if it is one. It's like the Turkish lira in terms of the volatility. So that's going to be my analysis of the gold macro update. I will get right into the crypto market update, going right into VET, VeChain, because there are definitely some people in the TikTok comments who were really wanting me to look at that particular pair. So I'll leave the SPX right there. And let's get right into this particular pair. I think I have it. VeChain, this one right here. Perfect. So let's start off with this one because this is clearly a fan favorite. Let's go to auto. Let's zoom back and let's discuss what we can see. I'm going to get a little bit of coffee and then we're going to get right into the VET paired with USDT analysis. All right, so we see key level of resistance and support, not perfectly at the bottom, but we see this major zone at the bottom. So this is like a huge consolidation, not really in a bull run or anything. You could look for opportunities, but this, in my opinion, is kind of like almost a no trade zone where BTC is taking more of the market gap. You want to be looking at BTC for longs. Whereas for alts, you might want to be looking at it for shorts. But the fact that we broke this major level at around 0.01 is extremely significant. And then we see we're really perfectly hitting that next major zone at around 0.12. Or 0.19, 0.2, sorry, 0.02. So we got a massive, massive range that we're currently in. And we're kind of right now testing the highs. Just looking at the daily here, we see massive wick to the downside, indicating lots of buy pressure within the market. But we also see this was a previous resistance. So at around this zone, there's going to be some demand area, which is kind of makes sense because this is the midpoint between the key level of demand right here, which we can make green, and the key level of resistance, which we can make red. So let's now go into the smaller time frames to see what we're able to identify. So we made a lower high there. So it's nice because we're seeing contraction ideally in the volatility, which is a good setup for continuation. So like something like this, if we're seeing a nice contraction in volatility, definitely still looks like it's a little early, but I will just draw in this trend line right there because we see a type B and then a type A candle closure, which is a valid area for us to be looking for possible opportunities. And then let's go into the smaller time frames even more. This ascending support is pretty vague right now because we would ideally like to see one more test of that zone. Where let's just get our snip and discuss this a little bit in greater detail. So we see boom, boom. So we see a major, major high. We see a pullback, but we see lots of buy pressure with this wick right here. We tried to make another move up, made it a lower high. So now we're making lower highs. So we're creating a descending trend line connecting the lower highs, which is really nice to see on an overall uptrend because you're able to identify these zones so you can enter here, here, so you can ride up on the impulse pushes. I don't love when things are going like this because you don't really have any contractions. You could have ascending wedges, but ideally you want to see pullbacks where you're seeing a series of lower lows and lower highs, or at least lower highs and higher lows, so we are squeezing, which it kind of looks like we're seeing right now on VET. So I'd like to see one more test of this resistance. So we see our first zone right here. This is our anchor point, and so we see our first rejection right there. I'd like to see one more rejection of this zone, so then we see a pullback. That would be really nice because then we have 3 validations of this key resistance, which would be a valid zone because I need to see three validations from both the resistance and support in order for me to use this as a valid symmetrical triangle. That is within my trade plan and within the structured requirements for me to use it as a potential trade. So we see anchor point. First touch, I'd like to see it maybe come up and then come down. So we have two touches right here, and then we have our one support, type B candle closure, which is our second support, and I'd like to see one more support hold right here, and that would create, in my opinion, a very well-structured symmetrical triangle continuation pattern, and a really good opportunity to look for opportunities to the long side. So that's my analysis on VET. On the 4 hour, I don't think it's ready just yet. I'd like to see one more test of the series of lower highs, one more test of the higher lows where we see support, support, and one more support, and then you're going to see that move to the upside. That would be, in my opinion, a really good outcome for this particular trade. So just trying to see what it might look like here. Maybe something like this, like that. We're going to see one more test of the resistance, one more test of the support, and once you see a break of this confluent zone right here, key structural zone right around here, that is when we're really looking to look for opportunities to continue the momentum. So you're looking for retests right there. You could look for stop entries, something within your plan that gives you an opportunity to enter when it breaks this key zone. So in short, that would be the overall trade plan for VET for me. So that's going to be my overall analysis on VET. For Tyler says for Link. So what we're going to do is we like to ideally stick to just the Performante Premium members for the actual altcoin market, because as a Performante Premium member, they're paying a monthly subscription service to know what's happening in the altcoin market, as well as for us to be looking at it and commentating on what the relatively strong cryptocurrencies are, and then not only which ones are stronger, so which ones should we be looking at, but also we go and break it down with our top-down analysis going from a daily into the 4 hour and hour chart. So we do this for many, many different alts in our Performante Premium section, which is a monthly subscription service. So I will not be doing Link, unfortunately, but we will be going over that within our Performante Premium members only video. So I will go back into the BTC charts as well as some indicators to understand the overall bullishness of the altcoin market. And how do we do that, right? Well, we'll look at that very shortly. We're first going to quickly talk about BTC, and then we will go into the indicators that we use in order to try to understand the aggressiveness and the bullishness of the altcoin market, which is very important. But in terms of BTC, we're just holding the squeeze, which is really great to see. We've been talking about this many times, how the volatility in Bitcoin is contracting, and the two previous times we've seen the contraction in volatility, let's go back to the daily chart, was first time, let's see, going back a little bit further. First time was right here, right? We saw this extreme contraction in volatility, right? Where we didn't get much moves to the upside or downside, right? Within this major zone of like 2 months, basically, we moved a max of 9%. That's not much for Bitcoin. What did we get after our major contraction in volatility? We got a massive expansion in volatility, and you're looking for continuation setups, right? These are the structures you're looking for. That was the first time we had extreme low volatility. Second time we had extremely low volatility was this zone right around here, right? What happened after this zone? We had massive expansions in volatility. You're looking for continuation setups, and you're looking for continuation setups, right? Oop, that's not what I'm looking for. But that's what we're trying to create for ourselves, is a situation where we have a high probability that the price is going to go a direction. We look for continuation patterns in that direction, and once we have a great trade on our hands where we're able to reduce the risk to basically zero, we ride it out for as long as we can, for as long as it's able to provide us profits, right? That is the goal for this next move to the upside. And what we're seeing right now is another contraction in volatility, right? That's exactly what we're looking for. So this is another contraction in volatility. We don't know exactly how long it's going to be, but we do see volatility and the movement of price action getting smaller and smaller and smaller. So what we're expecting is either a massive move to the upside or a massive move to the downside, right? And that is basically global risk sentiment, and in my view, the direction of the S&P and other traditional markets is going to dictate the direction of Bitcoin's movement for this upcoming either massively bullish move or massively bearish move, in my opinion, because we do see that the S&P, which is the traditional markets, is highly positively correlated with Bitcoin. Might be a little bit surprising to you, but that is the fact. Not extremely positive, but highly positive, around point positive 2. And we can see on the 180-day chart, it's on 0.25 right now. So this is the correlation between Bitcoin and the S&P 500, which is the largest 500 companies in the States, as well as a very good index for observing risk on or risk off sentiment. And we can see within the recent price action that the Bitcoin S&P correlation has broken above the recent high and formed a new high and is still trending up with a positive correlation of 0.26 out of 100, right? Out of 1. So 1 to 1 is like the S&P correlated with the S&P. Obviously, it's going to be directly correlated. So the fact that we're 25% from a direct correlation between the S&P and Bitcoin is staggering. That's a very highly correlated market in my view, right? So that's why I'm viewing Bitcoin and the cryptocurrency market as a major risk on speculative instrument for global investors, especially altcoins, right? Because altcoins are going to be the more risky, more speculative investment trade opportunity compared to Bitcoin. Bitcoin's like the safe haven of the crypto realm, is how I view the markets. So the fact that this is extremely correlated makes it easier for me to say that Bitcoin is a risk on instrument compared to if we're comparing Bitcoin to gold. Gold is a risk off instrument and asset, and BTC is negatively correlated with gold right now. So that's how I am coming to the conclusion that Bitcoin is a risk on instrument. And this consolidation will be breaking the similar direction as the S&P, in my personal view. All right, little bit more on the Bitcoin volatility decreasing with this chart here, getting a little bit of coffee, and then we'll jump right into this video. With a section of the video. So not a lot. We do see a little bit of increase in volatility, but we're still seeing it drop quite a bit. We're kind of near the lows that we were when Bitcoin initially broke the $4,200 level of resistance back in early 2019. The spring of 2019, when Bitcoin went from 4,000 to 14,000. That's how low volatility is right now. And that's why I think we could have another extremely aggressive push in the near future. Right? But right now, BTC is not the place to be looking for opportunities in the cryptocurrency market, in my view. And why is that? Alts are doing something. Alts are being interesting. And how can we see that? First thing that we're going to be looking at is the total 2, which is the entire cryptocurrency market, excluding Bitcoin, right? So this chart's going to look pretty similar to Ethereum, because Ethereum does take a decent chunk of the altcoin market cap. But we can see that we broke a previous resistance, holding as a new support, broke that previous resistance and holding as support. So overall, structure is on an uptrend, right? And we're holding the support really nicely. We do have a major level of supply that's coming up. But right now, in my opinion, we have more room for the upside than we do for the downside. So the trend and the momentum, I think, will continue for these alts, and that is what we're looking for. And we can see on the BTC dominance, it is holding this support zone at around 62, 63. If it breaks below this zone, that's going to be a huge bullish rally for alts. But if it holds this zone, starts to slowly trend up, alts will have a harder time breaking out. So right now, we are moving to the downside. We're testing support. If it starts to break below support, that's going to be even more of a validation that we should be looking into alts instead of Bitcoin. Dog says, couldn't see the white chart. Not exactly sure what the white chart you're looking at is. Probably BTC volatility. Hopefully you can see it now. Also, we do provide analysis on our YouTube channel, which is also live right now. So if you're having a hard time looking at this chart on TikTok, you can go on our YouTube and find it there. So overall, I do think a big move's coming. And right now, it's the time to be in alts, or at least looking at alts. So that's going to be the overall both global macro update and crypto market update. And let's just zoom out here, stick on the 6 hour, and basically look at the comments, and then that's going to be the completion of the video. Also have a little meeting with one of the Performante teammates, so that'd be pretty fun to hang out as well. So that's going to be the end of the global macro update. I will close off the recording, but I will open it up for questions after the recording is complete. Thank you very much for watching. We really appreciate it. If you find these videos helpful, educational, informative, entertaining, it would be great if you would subscribe to our channel. It does help us out greatly, and it also lets us know that you enjoy the content and you would like us to produce more videos like this, and to keep you informed on what's happening within the global macro environment and landscape. So thank you very much for watching. Really appreciate it. Until next time, have a good one, traders. All right, so that's the end of the video. Hopefully you enjoyed it. Don't have a whole lot of time because, like I said, I will be going to discuss some business information in a little bit here, but pretty interesting day. Can you look at odd USD by Christian? Yeah, no problem. So we already did look at this a little bit, but we can definitely look at it in a lot more detail. So let's go to the weekly. Let's remove all the drawings. We see a major level that we're currently at right now. 70, 170, 72, 70, 700 on the weekly. Let's go to the daily. Probably get rid of that. Major level of resistance that we're basically currently at, but we still are holding these nice series of higher lows. So let's get this trend line right here, and then let's get our projection. We can even bring that back a little bit, maybe right there. So we have a very nice, well-respected zone that is creating a series of higher lows, and holding a key structural resistance zone. So we can see, we can even get rid of this because we really don't need it. Right around here is our major level of significance that I'd like to see break. If we're being a little bit more cautious, we could go like this and make it a little bit bigger. But what I see right now is the price trying to test the key level of resistance. And we can just make that a little bit higher, and then we can see that there is potentially a squeeze that is occurring somewhere around there. And let's get our projection like so. Make it up. And we do see a nice little support zone right around here. Very well respected. Right around there. Don't want that color. All right, so that's currently what I see. Let's just extend that a little bit further out. And let's get this. So what do I see? On a major price action pattern, looking at the daily, we see a large ascending triangle pattern. That was a really poorly drawn level. This is a better drawn level. So we see there's a level of resistance right here and a key level of ascending support connecting the higher lows, right? So we know that there's a lot of demand here, as well as right here, previous resistance turn new level of support. So lots of demand at around the 0.7 range, right around here, right? We also see resistance 1, resistance 2, resistance 3. So we're in a consolidation going sideways on an uptrend where we're nearing a key level of resistance. So what we would be looking for is, yes, you would want to look for continuation patterns to continue the trend. You could, I guess, draw this descending zone like that. So if you're wanting to get a potentially a little bit early breakout, you would then just use this zone like here, bring that down there, close this off, and that would be the zone that you'd be looking to see break. So ideally, in a perfect world, you'd be looking for, let's just get our bars pattern. Obviously, it would be really nice, but you might not get it. But that is, in my opinion, what I would be looking for is a break and then a retest of this structural zone right here as a new level of support. Once that comes into fruition, then you have a pretty high probability of it continuing, and you could even use this previous zone like so, as if it does break this high and then retest it right there, that would be a confirmation that the trend is now in the continuation. And then for entries, you could look for a couple different opportunities. You could do a stop entry above the high, so it takes you into the trade and triggers you in once the momentum kicks in. Or you could be a little bit more of, I guess, depending on what you're wanting to look for, you could look for limit entries when it does pull back, so you get a nice, good, solid risk reward. Or you could look for down here and then have a risk a little bit lower, something along the lines of that, right? And then for major take profits, you're looking for around, let's say, this zone. So let's say if it's breaking out right there, that's going to be your first potential major level of target right around there. And you're also looking for minor levels, which would be from right there to there. And you were looking for that zone around there. So that's going to be the two different major targets. I have a short-term one right there. That is when you might be looking to potentially take profit or add if it goes above that zone. But depending on what time frame you're looking at, obviously you could be taking partial profits and then full profits. I don't exactly know what your system is, but that is my overall analysis of AUD USD. Is I do think that it's bullish. I think it's probably going to continue if the overall risk sentiment is going to basically continue to a risk on environment, and a little bit of, I guess, more relative strength and weakness discussion for AUD as well as USD. AUD's been doing pretty well in the risk on category. So what I'm talking about in terms of FX, I view the market in two different baskets of FX. I view it as risk on currencies, which is AUD, New Zealand, Canadian, GBP, as well as risk off, which is USD, JPY, CHF, and Euro. And yes, there are some times when it's not going to be exactly the same. Like right now, Euro is doing phenomenal right now. Yet, AUD is doing pretty well as well. So you see Euro, which is a risk-off currency, do better in a risk-on environment than AUD, which is already a risk-on currency. So it's going to be not black and white, where you just do the same thing over and over again. You have to be adaptive. You have to understand news and be able to try to pair certain currencies together that just makes sense. But I would say Australian dollar is relatively strong in the risk on currency basket, where it's been doing better than the Canadian dollar as well as GBP in terms of bullishness when it's a risk on environment. And the US dollar has been doing weak, or has been relatively weak compared to other risk off currencies like CHF, which is Swiss franc, or Euro, which has been doing pretty well recently. So I would say in terms of pairing, this looks pretty good if you're looking at the environment in the future to be continuing as a risk on sentiment. So that's going to be my analysis of AUD USD. It's looking pretty decent. Pairing's pretty good, I would say, overall, and good opportunities to be looking for longs, in my view. Alright, so that's going to be my update. Hopefully you enjoyed. I do have to sign off now, so hopefully you got something out of that, Christian. Thank you very much for coming on yet again. Hopefully you have a fantastic day. And until next time, I hope that you have a good one and are trading safe in the markets, basically. Alright, so that's going to be it for today. And until next time, have a good one, everyone.